you're not going to probably see too many undercuts in a market like this that keeps on going up. But it's something that is a great little formation to keep an eye on, especially if you've been in a stock. And if you can go to Generac and bring up a chart, and you can bring up a daily chart on February of this year, 2021.
Oh, sure.
And
just 1 second. February 2020. February.
any day in February. I just
Oh,
wanted to go
okay.
a few months out.
Yeah. There we go.
And let's.
This is through February 26th.
Oh wait, I'm sorry. Yes, let's see. Oh yeah, okay. So this is I see this happening a lot. What I want to key on is this day on December 4th of last year, where the stock hit 202.56. And yeah, right there. And what is going on? What I like to see is this is what I call an undercut. When a stock has been going sideways for a while and then comes down and undercuts at least a majority of the base, where it undercut everything going back to as far as October 30th. It didn't quite get below the October 28th price, but what it does is it comes down, and you'll see that on that 12/7 day that the stock actually reversed. It undercut a prior low and then quickly comes back up. And on that 12/7 day, it actually reversed, undercut the low, came back up, closed on the high. The very next day, it got some big, very, very big volume and started back up again. And it's just what an undercut does is it undercuts prior lows. It shakes out. It gets a lot of people out of the name that had been in it, that had recently bought it, and brings it into stronger hands. And it seems like it can rally very, very nicely from that. Now, if you just go to, I want to show you another one on the same stock. If you go just reset the chart to today, and this one's actually even a little bit better, looking at Generac, and I would like to concentrate on May 13th of this year, 2021, where you can see that the low was 286.82, and it undercut that prior low of 288. So what it did is it shakes out everybody who bought it over the last 6 or 8 weeks, undercuts, or even farther back. It went all the way. It didn't quite get under the 286.50, which was back on March 5th, but it undercuts all that, and it quickly comes back up. And then it actually built a little base for about 4 or 5 days, and then the volume started picking up to the upside. Or you got you've got about 6 or 7 days in a row where that stock starts marching up. But again, an undercut of a previous low. The farther the farther the low goes back, the better I like it. It just shakes out more and more people who have been in that stock, sometimes for months and sometimes for years. You get some real nice undercuts. And then you can see the move that the stock made after that. It just broke out and went up to 450. Another example of this is CF, which is CF Industries. And you just used today's chart. Yeah. And I think, David, this is one that you like.
Oh, you're on mute, David.
Yeah. But anyway.
Yes. Still own it. Still watching it closely.
Okay. See, now here's another one. Here's a stock that made a nice move. It went from 25 up to 50. So it deserved to pull back. It pulled back and actually went under the 200-day moving average. But what I wanted to focus on is the 43.19 price on August 19th. If you do your track price, that undercut all the lows going back to as far as March 25th. So everything above that, everybody who had bought under that was probably going, oh gosh, what do we, what's going on? But when you get an undercut and it's the action after the undercut if it comes back quickly, so it undercuts all that one day, and then 3 days in a row, it comes back up, builds a base, and then starts moving up. It just, again, takes out a lot of weak holders. And if you start getting some good volume, which it did on the upside, then that tells you that you probably have a stock that's in a strong position. And then one more example is you can look to Nucor, and this one I was actually buying on, and you use this today's chart, but if you look at the price action on 719, here's another situation. The stock had a nice move. It had gone from the high 50s all the way up to 110. So it almost doubled in price. Came down over about 6 weeks, and had the shakeout on 719, undercut, especially the last 3 or 4 weeks. And look at the volume that the stock, when it first came off the highs, it was some pretty high volume. You had about 4 days, 3 or 4 days above average daily volume. Then it came down again, and I see this a lot. On the second or third time down, the volume usually lightens up, and as you get into that 716 period, you didn't get any days above average daily volume. And then 719 was the low, and it actually traded, I guess it gapped down, closed near the high of the day. Then the next day it started back up, and then you got multiple days in a row to the upside, and then the volume started picking up. And so it's that shakeout and then the comeback that is really important and really good to see. And sometimes when I own a stock, let's say at Nucor at that point on July 19th, I didn't own the stock, but if I had, lots of times I see what happens on that. If it's so close to breaking down, I give it a day and see if it can quickly come back, because sometimes it's not good. It doesn't feel good when you're shaken out. If you were, then you can quickly come back and pick up the position. But it's just something to look to as a stock is correcting. Does it have a quick shakeout below the bottom, an undercut of previous lows, and then comes back? And that's sometimes can be a really good, a real positive situation to buy a stock. And you can see a lot of times they get great moves after that undercut. So that's the quick review on undercuts.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.